Famous Brands has posted an increase of 15% in its full-year headline earnings to 278 cents and a 15% surge in revenue to 2.1 million rand. Earlier, Samantha caught up with the company CEO, Kevin Hedderwick, and asked him about the expansion plans for this year.
Yeah, we opened 141 new restaurants this year versus 111 in the previous years. That's a growth in excess of 30%, and I think in this current climate it says a lot for our relationships with landlords, with our strategic alliance partners, and also with our franchise partners. What has been significant is the fact that we're seeing some nice traction in Africa. We built 33 restaurants outside of South Africa this year. Next year the number is going to escalate to 48, very close to 50. In terms of total restaurant growth next year, we're looking at opening 250 restaurants across our total repertoire of brands. But you will find is that brands that are still developing in terms of appealing to new markets, for argument's sake, Debonairs pizza and the growth in consumption per capita amongst black consumers, probably opening a lot more Debonairs pizzas than we will a business like Steers, for argument's sake. So a lot of activity in Debonairs, a lot of activity in Mug and Bean, a lot of activity in a business like Fisherways, but certainly don't discount the growth in big brands like Steers and Wimpy, because they're coming off significant bases. Both those brands are in excess of 500 restaurants now, so it's difficult to grow on the back of those numbers, but still there's scope to take them up as well.
Certainly well-established brands in South Africa, but tell us about the brands that you're taking into Africa. Which markets, which countries are you focused on right now, and which brands are you putting into those countries?
Yeah, we're in 15 African countries at the moment, and our strategy really, and we've been in Africa for the best part of 12 years, is to rather think deep than go too broad. So within the 15 countries we are in right now, we're trying to up our game in terms of expanding our repertoire, and I think the two countries that are standout examples of that right now are Zambia. Zambia, we've taken our network up to 19 restaurants, and we have representation there across Steers, Debonairs, Milky Lane. We've launched Wimpy there, we've done Mug and Bean there. Another market which has been significant for us in terms of expanding our repertoire has been Mauritius. Mauritius is now in excess of 20 restaurants. And we've also taken Wimpy into Mauritius for the first time. Mug and Bean, both have exceeded our expectations. We're about to open a Mug and Bean restaurant in Lagos, which we're excited about.
So is this your first foray into Nigeria?
We've been in Nigeria with Debonairs Pizza for a number of years. We're about to re-enter Nigeria with Steers. In fact, that restaurant's probably opened or opening this week. And we're probably 2 weeks away from opening our very first Mug and Bean in Lagos. So exciting times for us on the African landscape.
Tell us about Giramundo, because you bought the chicken business in 2010 for a small 1.2 million rand, and obviously big plans in the chicken space to take on the big guys like KFC and Nando's. Have you been able to make headway with that brand?
I wouldn't be as provocative as to say we wanted to take on the big guys of KFC and Nando's. I think that they've built phenomenal barriers to entry, but certainly we believe that there was space for a number two, particularly in the peri-peri flame grilled chicken category. If you can talk about it in cricket parlance, the chicken category is certainly a 5-day game. It's not going to be a 1-day game at all. Giramundo business is doing okay. I mean, for us, which is very important in our category, is that people taste the product and they love it. And for as long as we're getting that feedback from consumers, there's enough there for us to say we'll continue to invest capital and some sweat capital into trying to grow that business.
How much capital have you invested in Giramundo to grow it?
Ourselves, simply just the entry fee and some development costs, probably of the order of about 1.5 to 2 million. But then the nature of franchising is such is that the franchisee makes the investment in the capital and signs the lease. And so we've had a couple of franchise partners that have been very cooperative with us, have helped us to pioneer it. It's a hard sell. But we're quietly confident that there's enough there for us to continue to invest in the category.
Let's look forward and look at your supply chain, because revenue there up 17% over the period and operating profit growth exceeding that. You're looking at a case of efficiency gains, I assume, coming through from that. Central distribution, talk to us about the plans with regards to the central procurement program.
Yeah, I think the beauty of the Famous Brands business model is that it it's not just about intellectual property, is that we do own our own distribution chain in terms of the logistics business, and so we deliver to our franchisees. And in 2011 was a very, very busy time for us in terms of acquisitions, and so we spent 2012 integrating those acquisitions into our business. And you'll see that in the logistics business in terms of a 43% increase in the number of line items in our warehouse. So distribution is all about scale, it's about volume. And if you get the type of volume that we've been able to put in through those integrations, is that you find our logistics business get to an all-time high operating profit margin of 3.5%, which is terrific, and we're very pleased with that part of the business. We also have the ability to build our manufacturing capability in terms of providing product to the network, which previously might have been outsourced to third-party manufacturers.
Which products are you bringing in to that capacity?
Well, I think, having built manufacturing capability and expertise, we are now, and the chicken fillet plant is a good example of that. We commissioned a chicken fillet plant last year. It cost us 18 million with a payback period of 2.5 years. And that chicken fillet plant really is now gives us the ability to provide chicken fillets to our total network. So having done that, we're saying to ourselves, well, you know what, if we are not necessarily adding new brands at the front end, can we build manufacturing capability at the back end? So are there other categories of product being manufactured by outside manufacturers that possibly we could get into, providing the barriers of entry are not too high and the capital expenditure is not significant?
Talk to us about Creative Coffees, because that's a new company that you formed, a JV that you've got. You've got a 61% stake in that. You've brought House of Coffees into that group. A Juicy Lucy also incorporated into that. And of course, Kaiser Holdings, which supplies hospitals with food. What is the plan now for Creative Coffees going forward?
Yeah, it's a very nice JV. We've got a partner in the firm of Brent Carews, which is a young man with phenomenal energy. He has experience of working in what we call captive markets, which is private hospitals. We've often been asked to get involved in private hospitals in terms of the coffee shops that you find in those establishments. And inevitably what the hospitals have wanted is a business like Mug and Bean and or maybe a Tasha's. And it's not possible simply because we make sure that we stick to the integrity of all those brands. So you can't have a Mug and Bean in a private hospital that's selling flowers and chocolate bars and also delivering against the typical Mug and Bean menu. The beauty of working with a guy like Brent Carews is that he has coffee brands of his own in the form of Coffee Couture, and we want to work with him in terms of vending in our intellectual skills and capital to improve our presence on what we call captive markets.
So specialized coffee shops within hospitals kind of offering?
Absolutely, and not necessarily our own brands, but brands we might either develop with the hospitals and or brands that he has. But it's certainly a market that we think has got significant potential, but it's not a type of market we can just run some of our existing brands through.